Thank you for joining us at XM.com for this Forex Preview video. We'll be looking at the non-farms payroll report out on Friday. I'm Cristina Marujos, and joining me today is investment analyst Cristina Partenido. So, Cristina, we had a rather disappointing report out of the U.S. earlier this week. I'm referring to the U.S. manufacturing report, which now makes markets believe that they're in for a negative surprise for the NFP report on Friday. So, what should we be expecting?
Well, the U.S. employment growth is expected to rise from 100,000 to 145,000 in September, keeping the unemployment rate and wage growth stable. But honestly speaking, I wouldn't be very surprised if the number appears smaller than that, especially after the ISM survey showed the largest contraction in U.S. manufacturing sector and, more importantly, a decline in factory employment. So at the first glance, a worse than expected outcome could be upsetting given the high uncertainty around trade and concerns about whether the U.S. and generally the global economy is heading to a recession. But if we take a step back, we can realize that the U.S. is still in a much better economic position than other countries in Europe and Asia as regards factory production, labor market, and room for stimulus by the government and the central bank. So in the bigger picture, the U.S. is still resilient, is looking resilient and a safer place for investments despite import tariffs and retaliation by China.
I see. Now let's have a look at the Fed now. Do you think the NFP report on Friday could make a case for another 25 basis points rate cut at the Fed's next policy meeting?
Well, the next policy meeting is in the end of this month, and we still have some data releases and probably more political news to go through before setting our rate expectations. But definitely a negative surprise in the data could strengthen the case for a rate cut this month, especially if employment in the services sector, where most of employment comes from, comes weaker as well. At the moment, markets are pricing another rate cut by the end of the year, and if the upcoming data disappoint and trade talks fail, I don't see the reason for holding back this month.
I see. And let's have a look at the dollar now. One would argue that it has been quite non-sensitive, let's say, to the NFP reports lately. But do you think we could see some volatility in the greenback after Friday's report?
Well, at the moment, the US dollar is well supported by the weakness in the euro and the pound, and also by the fact that US interest rates are the highest among G10 economies and therefore more attractive to deposits. So I think that unless the Fed changes its view on the US economy and signals sharper rate cuts, the US dollar is likely to hold firm at least this week.
I see. Cristina, thank you for joining me today, and thank you for watching us at XM.com.